Welcome back to Investing Talk Podcast. Today, we're going to be looking at a company that's bringing high tech to an industry that's, well, let's just say a little slow to embrace the digital world.
Right.
We're talking about ServiceTitan, ticker
Yes.
symbol TTAN, how they're shaking up the world of home and commercial contractors.
Absolutely.
You might be surprised to hear just how well they've been doing since their IPO.
Yeah, it is. It's a fascinating story. ServiceTitan provides cloud-based customer relationship management,
Okay.
or CRM software, specifically designed for tradespeople, HVA technicians, plumbers, electricians, you name it.
Yeah,
This is an industry ripe for disruption.
I could see that.
Think about it. It's been largely untouched by technology, which means there's a huge opportunity for a company like ServiceTitan to come in and make a real difference.
And they're definitely making a difference, at least when you look at their stock price.
Right.
They went public in December 2024 at $71 a share, and now in February 2025, it's hovering around $98.02.
Wow.
That's a pretty impressive jump for such a short period. What's driving that kind of growth?
Well, their recent performance has been stellar. In their Q3 FY25 earnings report, they posted a 24% year-over-year increase in revenue,
Really?
hitting $199.3 million. What's even more impressive is that a significant portion of that, around 27%, came from subscription revenue. That tells us two things. There's a strong demand for their services, and their customers are clearly seeing the value and sticking around.
That makes sense. When you think about it, most homeowners are going to stick with the same plumber or HVAC technician once they find someone they trust. So how does ServiceTitan tap into that existing loyalty and actually grow it?
That's where the net dollar retention rate comes in.
Okay,
This metric measures how much revenue a company is generating from existing customers compared to the previous year.
got it.
ServiceTitan boasts a rate of over 110%.
Wow.
This means their existing customers aren't just staying, they're spending more on ServiceTitan's services over time.
Interesting.
Part of this is driven by their constantly expanding product offerings, which include features for everything from scheduling and dispatch to marketing and customer communication.
So they're covering all the bases.
They've also been strategically acquiring other companies to round out their offerings.
So they're growing their business from the inside out, essentially. But at the end of the day, investors also want to see profitability, right?
Absolutely. While they are still working towards peak profitability, ServiceTitan is making significant strides in improving its operating margins. In Q3 FY25, their non-GAAP operating margin hit 1%.
Okay.
Now, that might not sound like much on the surface, but it actually represents a 350 basis point improvement year over year.
Wow.
This tells me they're becoming more efficient in their operations, which is a good indicator that they're moving in the right direction towards sustainable profitability.
So for our listeners out there who are thinking about adding ServiceTitan to their portfolios, is this a good investment opportunity? Should they be jumping in right now?
That's the million-dollar question, isn't it? It really depends on your individual investment goals and risk tolerance.
Sure.
ServiceTitan has a lot going for it, especially if you're a growth-focused investor.
Right.
They have a strong position in a large underserved market, and their growth trajectory is impressive.
Yeah, it really is.
But they are still working towards consistent profitability, which means there's some inherent risk involved.
So maybe not for the faint of heart then. To help our listeners get a better sense of where ServiceTitan stands, let's look at some comparisons. Their price-to-sales ratio, or PS ratio, is currently around 9.61. How does that compare to other similar companies like Asana or HubSpot?
That's a great question. The PS ratio is a key valuation metric that tells us how much investors are willing to pay for each dollar of a company's revenue. It gives us a snapshot of how the market values the company relative to its sales.
Okay.
ServiceTitan's PS ratio falls right between Asana, which has a lower PS ratio, and HubSpot, which has a higher one.
Okay, so they're right in the middle. What does that mean for potential investors? Does that make ServiceTitan a buy, a hold, or a pass?
Well, that middle ground suggests that ServiceTitan's valuation is competitive for a high-growth SaaS company. They're not drastically overvalued compared to their peers, but they're not a screaming bargain either.
Right.
Remember, the PS ratio is just one piece of the puzzle. To make a truly informed investment decision, you have to look at the bigger picture.
And what does that bigger picture look like?
We need to consider things like the overall market trends, their specific growth strategy, the strength of their management team, and, of course, the competitive landscape. All of these factors play a role in determining whether ServiceTitan is the right fit for your portfolio.
Sounds like we've got a lot more to unpack.
What's particularly interesting about this industry is that it's historically been very fragmented and resistant to technology adoption.
Yeah, you don't exactly picture your plumber showing up with a tablet to manage his appointments.
Exactly, but that's precisely what ServiceTitan is trying to change. They're making it easier for these businesses to streamline their operations, improve customer communication, and ultimately grow their bottom line. And the market seems to be responding very well to that.
So if we connect this to the bigger picture, if ServiceTitan can continue to capitalize on this trend of bringing technology to the trades, how much upside potential do they really have?
That's the million-dollar question, isn't it? The trades industry in North America alone is worth an estimated $800 billion. That's a massive pie, and ServiceTitan has only captured a small slice of it so far.
But they are the leader in this space, right?
Yes, with over 11,800 customers, they're definitely the leader in the pack. And they're not resting on their laurels. They're constantly innovating, expanding their product suite, and even making strategic acquisitions to solidify their market dominance. Take their recent acquisition of Field Routes, for example.
Field routes.
They provide software for lawn care, pest control, and other field service businesses. By bringing them into the fold, ServiceTitan is expanding its reach into adjacent markets and creating a truly comprehensive platform for all kinds of trade businesses. It's a smart move that shows they're thinking about the long game.
So it's not just about plumbing and HVAC anymore. They're becoming a one-stop shop for all things trades.
Precisely. And that's what makes them so interesting from an investment perspective. They're not just riding a wave, they're creating the wave.
That's a powerful image. Okay, so we've talked about their growth, their market position, their valuation. But what about the risks? You mentioned they're not fully profitable yet. What are some other red flags investors should be aware of?
Well, one thing to keep in mind is competition. While ServiceTitan is the dominant player right now, there are other companies out there trying to get a foothold in this market.
Like who? Give us some names.
Keep an eye on companies like Jobber Podium and Housecall Pro. These are smaller players right now, but they're growing quickly, and they could potentially put pressure on ServiceTitan's pricing power in the future.
So it's like a land grab right now with everyone vying for their share of the market.
That's a good analogy. And just like in any land grab, the winner will likely be the company that can offer the best combination of features, price, and customer service. It's a race to the top, and ServiceTitan can't afford to get complacent.
Competition makes sense. What else should investors be thinking about?
Another factor to consider is their reliance on small and medium-sized businesses. These businesses tend to be more vulnerable to economic downturns, which could impact ServiceTitan's revenue if things take a turn for the worse.
So if the economy slows down, their customers might have to cut back on their software spending. That could put a dent in ServiceTitan's growth plans.
Exactly. It's a risk that investors need to factor in, especially given the uncertainties in the current economic climate.
Okay, so we've covered a lot of ground here. ServiceTitan's impressive growth, their position as a market leader, how they're valued compared to other companies, the competitive landscape, and some potential risks. So for our listeners who might be considering adding ServiceTitan to their portfolios, what does all of this mean? What are your final thoughts?
I think the key takeaway here is that ServiceTitan is a company with tremendous potential. They're operating in a massive and growing market. They have a strong track record of innovation, and they're led by a team that seems to know what they're doing.
But
But like with any investment, there are risks involved. They're not consistently profitable, yet competition is heating up, and their customer base could be vulnerable to economic shocks.
so it's not a slam dunk.
It's never a slam dunk in the world of investing. If it were, we'd all be rich. But if you're comfortable with a certain level of risk and you believe in ServiceTitan's long-term vision, it could be an investment worth considering.
I mean, that's helpful. Now, before we wrap up, I want to leave our listeners with a question. We've talked about ServiceTitan's potential to dominate the trades industry, but what if they really do become the go-to solution for every plumber, electrician, and HVAC technician out there? Just how big could this company get?
Now, that's a thought-provoking question. Imagine a world where ServiceTitan's software is running the back end of practically every home service business. That's a lot of subscription revenue. Not to mention the data they'd be collecting. They could leverage that data to offer even more valuable services to their customers, maybe even branching out into things like financing or insurance.
Like they could become the Amazon of the trades world.
That's not a bad analogy. If they play their cards right, ServiceTitan could become an indispensable platform for the entire industry.
So we've covered ServiceTitans from all angles. Their impressive growth, their market position, their valuation, the competitive landscape, and the potential risks. But at the end of the day, what's the bottom line for our listeners who are thinking about investing in this company?
Here's what I'll say. ServiceTitan is a company with a bold vision and the execution to back it up. They're operating in a market that's ripe for disruption, and they're leading the charge. But like any investment, there are risks involved.
So it's not a guaranteed home run.
There's no such thing as a guaranteed home run in investing. But if you're looking for a company with high growth potential and you're comfortable with a bit of risk, ServiceTitan is definitely worth a closer look.
That's great advice. Thanks for breaking it all down for us.
My pleasure.
And there you have it, folks. That's our take on ServiceTitan, a company that's bringing the digital revolution to the world of tradespeople. We hope you found this episode informative and insightful. As always, we encourage you to do your own research and make informed investment decisions.
Investing in the stock market involves risks. Please consult with a qualified financial advisor before making any investment decisions.
Don't forget to subscribe to Investing Talk podcast so you don't miss any future episodes. We'll continue to break down the latest market trends and uncover hidden investment gems.
And be sure to share this episode with your fellow investors and leave us your thoughts on ServiceTitan in the comments. We'd love to hear your perspectives.
Thanks for tuning in, and we'll see you next time on Investing Talk podcast.